This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss the history and evolution of retirement from pensions to 401ks and how investors can navigate planning and investing for their futures. We'll touch on the importance of saving early, harnessing the benefits of long-term economic growth for your personal portfolio, and the value of diversification in thinking through your unique financial and retirement goals. This is especially important today due to recent market swings. Many investors are concerned about the presidential election, the Fed, and what will happen next with large cap technology stocks. As always, it's important for investors to stay focused on long-term financial planning goals rather than reacting to day-to-day headlines. First, this chart shows the number of participants in defined benefit and defined contribution retirement plans over time. Defined benefit plans are commonly referred to as pensions, are where an employee is guaranteed a regular income at a set amount when they retire, which has declined over the decades. 401ks and 403bs, two types of defined contribution plans, have grown in popularity since their introduction. These plans allow employees to make pre-tax contributions to which they have greater control over managing. However, this can be a double-edged sword, since defined contribution plans require employees to take a more active role in planning for their retirement. Thus, it's important, more than ever, for investors to understand the basic principles of investing. Next, this chart shows the historical risk and returns of various portfolio allocations of stocks and bonds, ranging from 100% stocks on the left to 100% bonds on the right. Annualized portfolio returns are shown in blue, and volatility measured by the standard deviation is shown in gold. Now, regular followers of ours will know that we generally do not like using standard deviation as a measure of risk. Most simplistically, standard deviation is made up of both gain and loss deviation. My guess is, as an investor, you'd want to minimize the deviation on the loss side and maximize the deviation on the gain side. So at Dynamic Wealth Group, we use advanced tools to break down the components and measure an investment and overall portfolio's loss deviation as its true measure of risk. After all, if you measure the wrong thing, you might not get what you actually think you will. There's an old saying that goes, measure twice, cut once. We've all heard that saying. Well, if you're measuring the wrong thing, it doesn't matter how many times you measure it. However, I digress. As you can see, generally speaking, portfolios consisting entirely of stocks have the highest returns but also come with the highest level of standard deviation. A portfolio of only bonds is less volatile, but has lower rate of return. Which portfolio mix is appropriate depends entirely on the investor and their needs. The right mix of investments in a portfolio should include more than just stocks and bonds. It should follow what we call a multidimensional approach towards diversification and asset allocation. Finally, this chart shows the value of staying invested over long periods of time. It emphasizes the importance of not overreacting to dips in the market, but to instead remain focused on the long run to benefit from growth. This is especially relevant today, given the level of market uncertainty that investors may face over the next several months. Planning for retirement can feel daunting, but by starting early and investing in an appropriate portfolio, investors can help to secure their financial futures. I hope you found these insights valuable. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, or if you'd like to learn more about standard deviation versus loss deviation, you can download our eye-opening white paper titled Busting 7 Risk and Return Myths. Click the link below or visit our website at dynamicwg.com. Or reach out directly by emailing us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care everyone and make smart logical, and fact-based financial decisions.